Tesla stock has been absolutely destroying short sellers. The short loss is bigger now than what you've seen in 2021. So needless to say, if this rally continues, you could very shortly be in a massive short squeeze. The stock could rally much higher from here. This really isn't even the start. Now, what are we looking at for this week? Well, we're going to have Fed Jerome Powell twice, on Wednesday and on Thursday, and that's really going to be the biggest catalyst. Now, there is some news that came out over this weekend on Tesla that is also quite encouraging. News on the Tesla semi-truck that's not as encouraging. Overall, what does this mean, and what should you know heading into this new trading week? All things considered, quad witching was on Friday, and you're going to have around $4.5 trillion that gets reallocated. Whether it's bullish or bearish, that could also have a role to play with Tesla stock. So we're going to get into everything you need to know. Hit the like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comment section. If you like to make money, if you want to make more money, if you want to stay up to date with what's happening in the markets, and reach financial freedom, this is your place to be. Now, if you also want to come trade with us live in real time, every time I make a trade, I post it down below in the trading community. We have tools on trading strategies. We have a news wire over there. We have soon to be, some real estate tools as well that will be coming. Things will be added over time. Keep that in mind. If you want to join, link down below in the pinned comment or the description of this video. Nonetheless, let's dive into all of this info. So let's start with the news that came out over this weekend. And it looks like Tesla is trying to boost some delivery numbers as we end the second quarter with the Model S and the Model Y. Tesla is now discounting both of these models by $7,500. Now the Model S dual motor all-wheel drive is listed at $84,740, down $7,500 from $92,240, and the 2023 Model S Plaid is listed at $104,740, down $7,500 from its pricing of $112,240. Now, this is not atypical for Tesla. Tesla usually does do some kind of discounting towards the end of the quarter to get more deliveries, to get more sales before that big number comes out on July 2nd. So this does not raise any alarm bells, although you will get some bears that try to point this out as the demand problem persists with Tesla. Absolutely not the case. We've actually seen recently the Model Y pricing has been raised almost every single week since April. Now to the piece of bad news that came out over this weekend, and I don't think it's really too bad, but the bears are going to point this out. Now it says there's a new recall notice for Tesla's electric-powered semi-trucks, suggesting it only produced 36 units in 3 months. This is obviously below where analysts wanted to see this number, although it's not a main part by any means of Tesla's business. It's not even a fraction of Tesla's overall business. So I don't think it's going to be a jaw dropper if they did only make 36 of these. It's probably not going to be a big deal. But the bears are probably going to try to use this in their bearish thesis on Tesla. In other news, Chinese president tells Blinken in a high-stakes meeting world needs stable U.S.-China relations. And the Chinese president said in quotes, "I hope that through this visit, Mr. Secretary will make more positive contributions to stabilizing China-U.S. relations." Said this on Chinese state TV, quote, "Candid and in-depth discussions between the two officials that led to progress and agreement on some undetailed specific issues." So this is a positive thing, right? For our markets, for a lot of your Chinese American stocks, for a lot of companies that do business in China, this is going to be positive. And a lot of companies do business with China. So we'll see how the markets take this. As of right now, futures are in the red by almost 0.25%, which this is not to be unexpected after a quad witching week. And we'll talk about that here in just a few. But Goldman Sachs also joins Wall Street banks in cutting China's growth outlook as the post-COVID bounce fades. You could see that Goldman Sachs, UBS, Bank of America, JP Morgan, Nomura, and Standard Chartered have all downgraded their growth estimates for China for 2023. And this, not such a good sign. If China is not going to carry the world with growth, and it's not coming from America, then you're getting a little closer to a global recession. Although a recession looks more unlikely now after the Fed's summary of economic projections that we got last week shows that Fed officials expect GDP for 2023 to be 1%, 1.1% in 2024, and 1.8% in 2025. This is up from 0.4% on the March projection, while the Fed also expects the unemployment rate is no longer going to rise to 4.5%, but only to 4.1%. And at the same time, the Fed expects 2 more interest rate hikes, and they also expect inflation to be stickier than what they previously forecast. Now, this is what you are looking at, the summary of economic projections. This is what we got on Wednesday. This was very negative. This was very hawkish. It caused the markets to initially fall almost 1% once this came out. But then 30 minutes later, when Fed Jerome Powell started to speak, he sounded very dovish, and the markets started to roar back to life, actually closing positive that day, and then subsequently rallying over the next couple of days. And that's because Fed Jerome Powell was not as hawkish as this summary of economic projections was. So a big disconnect actually happened on Wednesday of last week. Well, Fed Jerome Powell is now going to have a chance to reconcile potentially maybe something he missed or left out during his commentary. That's because we're going to hear from Fed Jerome Powell not once, but twice this upcoming week. First time is going to be on Wednesday. Second time is going to be on Thursday. Powell will speak at 10 o'clock in the morning on Wednesday, and again at 10 o'clock in the morning on Thursday. At the same time, you are going to get a bunch of Fed speakers both of these days. So, question is, did Fed Jerome Powell mean to sound so dovish? Was that just a mistake that he made? Did he really mean to sound hawkish, that inflation is going to be a problem? Rates do need to go higher. Markets didn't exactly believe Fed Jerome Powell. The markets, they are no longer pricing in a rate cut in 2023. They're now pricing that in for January of 2024. But you're only expecting 1 more rate hike. Not what the summary of economic projections said of a terminal rate at 5.6%, which would be 2 more rate hikes. So if Fed Jerome Powell was not clear enough on Wednesday, this week is going to be his chance to set the market straight. Fed Jerome Powell might not like this market rally as well, as this does lead to higher inflation expectations and overall more consumer spending. It makes the rate hikes that they have done so far not work as good when the markets continuously are going higher, in which we are seeing currently. Speaking of the markets going higher, we have an earnings report that's going to be huge for our markets. Tuesday, FedEx will report earnings. This is big for the economy, for how people are spending money. If FedEx does not have good earnings, that's going to be a problem for our markets. Another potential problem the markets could have is the fact that we have just continuously went higher on the S&P and the NASDAQ. Even when you look at a rally in something like a Tesla, I mean, you're not even close to the same degree of a rally in Tesla that you have seen in the NASDAQ or the S&P 500, well past August highs on both of those indexes. Something like a Tesla is not even close to that level. So we're going to talk about Tesla and where Tesla's going to go this week. But we just had quad witching. Now, quad witching is when single stock futures expire, single stock options, index options, and index futures all expire on the same expiration date. They can be trillions of dollars. And this quad witching was around $4 trillion. And what that means is whether people won on those trades or they lost on those trades, they have to make a decision whether to continue to be long in this market, to go short this market, to stay out of this market. And I think the higher the markets go on this unsustainable rally, you're going to see more downside positioning. So it would not surprise me for this week to be a flat or down week, just based off of quad witching and rebalancing, reshuffling, and repositioning of portfolios. Throw in there Fed Jerome Powell. He's really going to dictate what ultimately happens to this market. If he comes on with the same dovish stance that he took on Wednesday, markets are probably going to rally from here. And JP Morgan, other big banks think this rally can continue. So don't fight the rally. Ultimately, is this unsustainable? Probably. Does it have to fall this week? No. And Tesla does not have to fall this week as well. As you can see, the S&P was down 1/3%. The NASDAQ was down over 0.5% on Friday. And what did Tesla do? Well, Tesla was up 1.81% in regular trading and went up another 0.36% in after hours, all in all, an over 2.2% positive day. This is because people are getting excited about Tesla's delivery numbers that are going to be coming on July 2nd. If Tesla beats that estimate of 440,000 deliveries, Tesla stock is going to rally exponentially higher from here. And a lot of people are like, what do you mean exponentially higher? You're going to break over 300. You're likely going to find resistance at 350 if Tesla has good delivery numbers. Even just look at Tesla in context to the S&P or the NASDAQ. This was August of 2020. Tesla is still down here. Look at the S&P. This was August of 2022, right? And the markets are up here. So Tesla still has a far runway to rally, especially if they do beat on estimates. Now, I think there's an aspect of a short squeeze here that could start to play out that should not be ignored. And that is because short sellers are currently down more in 2023 than they were in 2021 when Tesla was hitting all-time highs. Short sellers are down over 60% in the last 3 months. You went from $14.5 billion worth of short positions now to $23.27 billion worth of these short positions. And a lot of these shorts were taken out well under $200 per share. Well under, in the neighborhood of $100 and $150 per share. Everyone thought demand was a problem, that Tesla was going to see some big contractionary numbers year over year, and that was never true, and that never materialized. So it looks like short sellers are simply put off sides here. And whether they cover slowly on short positions or if it happens in the course of a week or so, I think either way you put it, if Tesla continues higher from here, you're going to see a short squeeze. And that's really where you get up to 350 or even potentially new all-time highs with Tesla. Now, I think if there is a strong sign of a rally continuing or potentially all-time highs coming for Tesla, it is the option activity. The option activity that we have been seeing is massively bullish. Take a look at some of these orders. This one expiring June 30th, a 290 call worth $73,000. That's pretty far off from where we are now at 261. That's expecting a pretty big rally over the next 2 weeks or so. A 270 call, 280 call, 285 calls expiring June 23rd. That is this week. 285 call expiring June 30th. You guys get the idea. These orders are way out the money and massively bullish. a July 28th 320 call with a break even of 326 for $160,000. Another 320 call, a 350 call for August 18th, 385 call for August 18th, another 385 call for August 18th, another one right here. It looks like a vast majority of the options that we are seeing right now are expecting a much greater move higher than where Tesla currently is now, and I think that is a big opportunity for us shareholders. But I do think at the same time, in the near term, this week, if Fed Jerome Powell is bearish, although that does not have to have a negative price action response from Tesla. Tesla does not have to fall if the broad markets do. We've seen that happen on Friday. Tesla did not fall. The markets did. I think you could trade sideways off of that. You could be volatile, up and down, and you want to see that happen to some degree. You want to see the RSI come down and the stock price not actually come down as well. And we've seen that happen with big tech names that have rallied in 2023 so far. Think Meta, think Apple, think Microsoft, think Nvidia. These names have seen a pretty steady uptrend, a lot of them at all-time highs, but the RSI is not super overextended. That's because it's happened at a slow and steady pace. You've seen flat trading weeks with some of those stocks at times, and that gives the stock more room to make an upside move before things such as trading algorithms start to short the stock based off of the RSI being overextended. So in a weird way, I do expect some sideways trading action, some volatile up and down trading action this week. Wouldn't surprise me if the stock ends this week at the same price it is now, and then continues on a rally for next week as people really start to get ready for the July 2nd delivery numbers. And that probably causes some shorts to cover on short positions before those delivery numbers even come out. So really what I expect from now until July 2nd is some sideways trading action for the RSI to come down, and then leading up until that week of July 2nd, probably to see a ramp up higher to the highest level that we have seen in the cycle, maybe 280 in that range. And then after the delivery numbers come out on July 2nd, to see that exponential move higher after that, guys. So that is going to do it here in this video. Hit that like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comment section. Like I said, if you guys want to come trade with me live in real time, get access to the newswire, get access to tools that you can use in your trading strategies, link down below in the description of this video. Never financial advice, never a recommendation. Simply, you can look at and see what I'm trading, try to find something better. Maybe say, hey, this is what he's looking at. Maybe I can make money off of this XYZ, right? That's the way that you should more or less use that tool, guys. So that is it. You guys enjoy the rest of your day, and I will see you in the next one.